Hi guys, welcome back to Finpact. I believe that data is going to be a driving force in many different industries, and this will heavily impact the stock prices of those companies that provide the services to address those data needs that we have today. I want to talk about a company that is in the data space, and that is Micron Technology. Micron Technology primarily creates computer memory and computer data storage. Now, Micron Technology is capitalizing on a lot of trends we're seeing with the shift to 5G technology and artificial intelligence. Micron specializes in DRAM and NAND memory chips. So DRAM, which is basically dynamic random access memory, and this is the type of memory chips that are used in computers and in servers. Whereas NAND chips are flash memory chips used in smaller devices such as our smartphones and USB drives. And the CEO, Sanjay Mehrotra, thinks that data has the potential to transform the world. But for this to happen, new computing architectures will be required. And he believes the driving forces in the data industry right now are AI and 5G. In his interview with CNBC, he said that the trends driving the growth for Micron Technologies include 5G, artificial intelligence, intelligent edge, and smart user devices that are secular trends in driving the demand growth for the business. And the pandemic has accelerated this digital transformation. And he also said that the markets today are more diversified than ever. Automotive, electric vehicles requiring more memory and storage are actually becoming data centers on wheels in the future. And certainly smartphones, data centers, gaming, and industrial applications are all contributing to the increased need for chips. Now, their purpose and what they're manufacturing sounds great. It sounds like it's all in line with the trends we're seeing and what we want a company to be focused on in the data sector. However, in practice, we need to see the company's earnings and how they're actually able to manage their finances in going ahead in achieving this. But this company has actually delivered by showing a fantastic Q3 2021 earnings report and an even better outlook for Q4 earnings report for 2021 as well. Now, yes, their purpose and what they're manufacturing sounds very much in line with the growing trends of the investing future. But as investors, we also want to know about their earnings reports. And actually, they have had a fantastic Q3 2021 earnings report with an even better outlook released for what they project Q4 2021 to be. So let's have a look at that. So the current price of Micron Technologies is around $80.33. And on TipRanks, it is rated as a moderate buy with a buy price of $117.61, which is a 46.41% upside from where we're currently at. And this is based on the ratings of 21 Wall Street analysts. In this quarter, they reported a revenue of $7.4 billion, and this was up 19% from the previous quarter in the last year. And year over year, we saw an increase in revenue of around 36%. We also saw a gross margin of 42.9%. Gross margin is just simply the gross profit, which is the revenue minus cost of goods sold. This figure would be divided by the total revenue to get your gross margin of 42.9%. It's also important to note that their revenue is split up into two components, which is the DRAM chip revenue and also the NAND chip revenue. So DRAM, which was the dynamic random access memory chip, that contributed to around 73% of total revenue in Q3 2021. And this revenue was up by 23% from the previous quarter and around 52% year over year. And as for the NAND chip, we saw that was actually 24% of their total revenue. And this was also up by 10% Q on Q and around 9% year over year. Micron Technologies also has an EBITDA of $4 billion, and this compared to their revenue of $7.4 billion is an EBITDA margin of around 54%. The projection that Micron Technology has given for Q4 2021 is even better than what we've seen in the earnings for Q3. The revenue for Q4 is projected to be $8.2 billion plus minus $200 million, which is around a 10.8% increase from $7.4 billion that we saw in this quarter. The gross margin is also expected to increase, but around stay the same, plus minus 1%. Operating expenses have been projected to slightly increase around to $900 million plus minus $25 million. This is an increase of around 9.6%, which is kind of in line with the 10.8% increase in revenue. So nothing concerning there. And the diluted earnings per share right now is $1.88, whereas it is expected to increase to $2.3 plus minus 10 cents. And that is around a 22% increase in EPS, which is delivering higher value for the shareholders. Let's have a quick look at the balance sheet, which gives a snapshot of the financial position of the company at one point in time. So for this quarter, we have a cash and cash equivalents of 7.7 or around $7.8 billion, which is a slight increase compared to the previous year. Total assets have actually increased by around $2 billion. It is around $56 billion this year compared to $54 billion in the previous year. Let's also have a look at their debt, because sometimes when a company is overly levered, which basically means it has a lot of debt, it can sometimes have trouble in paying its obligations, such as the interest or even paying back the principal in the first place. Now, I don't think this will be any worries here, because their total debt is around, if you see their current debt, this is $297 million, and then their long-term debt, which is the larger amount here, is around $6.4 billion. Now, that sounds very large, but compared to the assets at $56 billion and total liabilities at 13.7, so around $14 billion, those assets can definitely cover the liabilities. You know, their liabilities as a percentage of assets is only around 25%, which isn't concerning. Usually anything under 40% is considered ideal. Now, although the debt didn't look too concerning in relation to the assets, I want to have a quick look at what this debt consists of and also see the leverage ratio. So the leverage ratio, if you divide $6.7 billion of total debt by the EBITDA we saw for this quarter, which was $4 billion, it gives us a net debt to EBITDA ratio of around 1.7 times, and that's not too high. So I'm okay with that in terms of as an investor. I think anything higher would be very concerning. So we should note that the debt consists of finance lease obligations, and these are all the debt tranches that we have that are due in different years. So in 2023, they have around 1.25 billion due, and then the next substantial thing that is due is probably in 2024 with 1.2 billion in term loan A. Now, I just want to add that this 1.19 billion term loan A was actually taken out to pay off another term loan, which is this one, the extinguished 2024 term loan A. So they took out a loan in May 2021 around 1.9 billion under the unsecured 2024 term loan A that we saw above, and they used those proceeds from that term loan to pay the 1.19 billion extinguished 2024 term loan A. So they've basically done a refinancing, but it's important to note that the principal amount is going to be due in October 2024 and may be prepaid without penalty. So hopefully they're able to pay that all off on time, but looking at what they have assets wise, you know, they have enough of a buffer of cash, and their revenue growth is very strong. Their EBITDA is at $4 billion. Their net debt to EBITDA isn't too high at 1.7 times. So I don't believe there's anything too concerning in their balance sheet. So just recently, Micron sent out a press release that they have entered into a definitive agreement to sell its Lehi, Utah fab to Texas Instruments, and that the economic value for Micron from the sale is $1.5 billion. And it's comprised of $900 million in cash from Texas Instruments from the sales transaction and approximately $600 million in value from select tools and other assets. So we should expect that their cash increases when the sale closes. We're of around $900 million, and then they will probably gain in some other assets in these tools. So we should see a very positive earnings report in 2022 as well, depending on when exactly the sale gets closed and when they receive the cash amount. So Micron announced its intent to sell the Lehi facility in March 2021. So at the same time, the company confirmed plans to end production of 3D X-point technology and pursue new memory solutions for data centers enabled by the CXL interconnect. So CXL delivers high-performance connectivity between computers, memory, and storage, and addresses increased consumer workload requirements driven by the broad proliferation of artificial intelligence and data analytics. Can I please have that? You know, sometimes I have a million tabs open and my computer crashes. I'm just kidding. Probably not for my use. It's not like my computer is a big data center. But anyway, we saw another bullish press release by Micron. Micron accelerates breakthrough platform innovation with advancements across industry's first 176-layer NAND and 1-alpha DRAM. So by innovating in memory and storage, this can help them accelerate in the data-driven insights that they want to achieve. So this will help them have new capabilities from the data center to the intelligent edge. So I just want to touch upon what some analysts think will happen to the price of Micron. So Evercore analyst CJ Muse thinks that it will have a $135 price target, and he expects DRAM supply to be lean going into 2022, with NAND improving into the second half of 2021. Now, I read another analyst down here Citi research analyst who said that we expect this to result in flat DRAM prices during fourth quarter of 2021, but DRAM pricing to increase in 2022 due to low supply growth. So as this analyst mentioned, and Micron also warned about DRAM memory shortages and price hikes ahead. So when that supply for DRAM memory chips is constrained, we will see price increases, and this can have a direct impact on the revenue for Micron Technologies. As a sort of monopoly, they can charge higher prices and see an increase in revenue. So as demand for chips rebounds and supply tightens, the electronics industry is experiencing a massive undersupply of DRAM memory chips. And this causes average prices to spike. And I mean, this is kind of a good thing in terms of the revenue for Micron Technologies. They will be able to charge higher prices. But this isn't great for business costs and adoption overall in that quarter when those prices are increased, because businesses may find these chips very expensive. Now, if supply is constrained and demand does not change too much and it's price inelastic, then Micron Technology should see an increase in their revenue. Micron said that tight supplies coupled with strong demand would cause the semiconductor industry to fall short on filling orders for DRAM through the end of 2021 and possibly longer. I mean, a supply shortage is exactly what would cause the DRAM prices to increase, but this would actually impact Micron Technology's revenue in a positive way, which is what the analyst Christopher Danley from Citi Research also predicted. The graph for the price of Micron Technology has shown a steady increase throughout the years. We've seen a major run-up in September 2020, so this could suggest that the overall market has been overheated. But I also think there has been a stock market bubble after the pandemic. We saw lots of stock prices increase, especially tech growth stocks. So this recent downtrend is potentially a bit of a correction despite the positive earnings report. I believe that we'll probably continue a little bit in the downtrend, but then as those prices increase in 2022 for the DRAM chips, then we will see further positive earnings reports for Micron Technology and see further price increases. I think it could be a good stock to hold for the long term. It's shown a pretty good track record since 2016. And with data being that huge disruptive force, I think that we could see some really good price rallies in data companies. So guys, if you enjoyed this video, hit that like button down below so that we can help push this video out so that more people who don't get to see my videos get to see this video. And if you haven't already subscribed, hit that subscribe button down below and that bell notification to get notified when I post a video, as a lot of it is time sensitive information. Also remember, I'm not a financial advisor. These are just my personal opinions and my own personal research. Make sure you always do your own research, especially before you invest in anything. And I also have a Patreon where I post about the trades and the stocks I buy in real time for my own personal portfolio. You get a lot of support from me one-on-one, and depending on which tier you select, you can even have phone calls with me so that I can help support you in your journey as well. I also have a link down below where you get 2 free stocks worth up to $2,000 when you invest your first $100 on WEBULL. So check that out. I hope you guys enjoyed this video and I look forward to seeing you in my next. Bye!